Hey everyone, welcome back to Upside Down Data. Today I want to talk about one and some indicators that I'm looking at to evaluate its current price action. If you like the content and remember to subscribe to the channel, give the video a like and follow us on Twitter, where we put out regular updates about our indicators and more. So one, like a lot of altcoins, has been in a very nasty drawdown, really, ever since January of this year. It has been basically down only ever since. We measure just from the January top, which isn't even the all-time high. We were down as far as 94% and currently down a little under 93%. An absolutely brutal drawdown, coming down to about 2.6 cents, coming off of being up closer to 40 cents. This is an absolutely brutal drawdown. But of course, one is not alone. A lot of crypto assets have been correcting very heavily. One has been taking a pounding. But what can we make of this price action? What are some things that we can look at? Is there any reason to be, thinking that things might reverse? So the first indicator I want to talk about is the momentum bias indicator, or MBI. This is an indicator we have here at the channel that basically indexes how much momentum is in a given asset at a given point in time. So 0 is the average amount of momentum in the asset, and the values here are denoted in standard deviation. So one standard deviation above the mean, one standard deviation below the mean. And I've just color coded it to be green when it's above the average, red when it's below. And so generally speaking, you want to be above the average, right? That tends to be the bullish phases in an asset, is when the MBI is green. Then when it flips red, that tends to be a bearish time. Green tends to be bullish, etc., etc. So bear markets are very much denoted by spending a long time hanging out down in the red, and that's exactly what's going on right now with one, is that we've actually put in the lowest levels of negative momentum bias it's ever seen, even lower than the March 2020 crash, which is saying something, right? Because, that was a pretty big drawdown to the all-time low. But when you just compare it to this drawdown, this has been pretty massive. This has been, almost 94-ish% drawdown just from January. Absolutely brutal. And so that's really what the MBI is picking up here, that just this pervasive, unrelenting negative momentum bias that's been drawing the price of one down with it. Now, what I'm going to be looking for on this indicator is, can we start charting a course back to the upside? And then especially, can we actually reestablish a positive momentum bias regime? Because one of the things that'll happen a lot in bear markets, and we actually saw it play out right here, is that you'll kind of go down into the red, you'll poke your head up above 0, and then you just quickly get rejected back to the downside. We see this behavior over and over in bear markets across many different assets we look at, this behavior where you'll see these peaks above 0, then just heading right back into the red. So what I would look at as being a more confirmation of maybe a turn back to the bullish is if we can get back up and then spend a long time up in the green, right? Spend a long time up here. And it's, we might dip back down to the red, that's fine, but at least establish some positive momentum bias for a while. Because oftentimes what you'll see before you go into these big parabolic rallies is this kind of oscillation around the average, kind of reestablishing this kind of, with some variation, generally being around the average amount of, in this case, positive momentum. The average momentum in one is positive. It's trended up with time. Kind of reestablishing momentum bias that's hanging around that average. And then if you're kind of oscillating around 0, that oftentimes then leads to these big explosions to the upside. We've seen this with other assets. Bitcoin behaves this way in its bull runs, where early on it kind of oscillates around 0, then it goes exploding to the upside. So that's what I'd be looking for, is spend a while up in the green, then maybe start acting in that, kind of oscillation type of behavior, and that might be really when one then might be gearing up for a big explosive move back to the upside. But the first step is just to get back to 0, right? So we have a long ways to go already. We're hanging out, one standard deviation below the mean right now, pretty deep down in the red, historically low for one. We'd like to see ourselves get back above here before beginning to get too excited about anything. That's the MBI. Very much a bearish outlook here. One thing that you can note is that there's a possibility of a bullish divergence forming here. Of the lowest low was set actually in this move here. Then with this more recent capitulation, we actually set in a higher low, at least so far, if this turns into a low. And this being a momentum indicator, you can look for divergences. They don't always play out, so it's always had to take it with a bit of grain of salt. But it's just something that's worth. I noticed when I looked at this chart. Just wanted to mention here. Okay, so another indicator that I want to talk about as well is the market direction classifier, MDC. This is a model that I created a little bit more recently on the channel. And what this one's intended to do is to give us kind of a more macro perspective of what kind of a trend we're in. Are we in a downtrend or an uptrend? And that's what this is trying to look at from a more macro perspective. So the way that this model works is that it basically assesses what the asset is doing, and it creates a critical price level that it's watching. If the asset can get above that price level, that tends to be bullish. If it drops below that price level, that tends to be bearish. And so then I've color-coded red, anything below the critical level line, and then green, anything above the critical level line right here. And you see it does a good job in the past of generally identifying these big kind of more macro moves to the upside in green, and these bearish periods, these periods in red, where it's either a correction or these deep dives. And really what the MDC is useful for, what I see it as being very useful for, is kind of like a risk management type of model, where you can watch it, and then if price is starting to fall below it, that might be a time to take chips off the table, and it can save you from these big drawdowns. And then, even if it is just a little correction, you're not really going to be losing much money if you just reinvest back in once it pops up. You'll notice, it dropped down here in this correction, popped back up, but then, you would have actually sold at a slightly higher price than you would have been buying back in. And then on the drop down, you actually would have been selling at a higher price than you bought at the beginning. So you would have been making money through that whole thing, even if you wouldn't have been catching the absolute peaks. So this isn't a model that's necessarily going to be having you catch the absolute tops. That's not really the point. The point is to save you from these really nasty drawdowns and get you in pretty early for these big moves to the upside. You'll see that it got you in almost at the ground floor back here for this big parabolic move to the upside. That's really what it's designed to do, is help you identify when the trend is changing so that you can get in, and then also identify when it's changing to the other side so you can get out and not lose more money. So that's what I like about it. It's kind of a risk management helping device, potentially. So, of course, not financial advice. You should use these data however you would see fit, but that's the way that I personally look at this indicator. And so what you can see is that, it identified pretty early on, back at the beginning of the year, that we were now falling into a downtrend, and indeed, that ended up being very prescient. That it called it very well, because here we are now down in a, what was 94% from the very top, probably, maybe somewhere in the 90 to 80% range from where it would have called you off here, still saving you from a massive amount of downside. And what's useful about this, again, is that because it gives you this critical price level, it tells you exactly where it's looking for before it might become convinced of a trend reversal. And currently, it's thinking that, one would have to show some strength. It would have to get all the way back to 4 cents before this model would start seeing any possibility of this being a trend reversal building. Now, this is a dynamic level. This will continue to move, and I suspect it'll probably continue to fall down closer to price as time goes on, if we just consolidate in this range for a while. But for right now, it's not seeing any special reason to be hopeful yet. It thinks that one really needs to start showing some strength before it'll get too excited about this being a potential more macro trend reversal like we've seen in the past. So that's what those two models say. And again, they're not really, all that hopeful. They're kind of bearish. And so really, in terms of just looking at one's price action, personally, I'm not going to be getting too excited until we see some of those indicators start to flash a little bit more bullish. And one thing I did want to talk about in this video is with altcoins especially, sometimes you see this mentality of people where they're kind of really dead set on trying to catch the bottom. There's kind of becomes this obsession sometimes with altcoins of catching that bottom so you can really get that maximum return when things are to the upside. So when people look at these price charts of altcoins, what a lot of people imagine is like, oh man, imagine I was the person who bought in right at the very bottom. So in this case, back in the March 2020 crash. Imagine I bought in there. Look how much money I would have made if I then sold the absolute top, 35,000% the upside. Now, the problem with thinking this way is that during this time, it's very hard to know if this is the bottom. it's incredibly difficult to know if this is the bottom. And you always have to think about the counterfactual, think about the other hypothetical. In a different universe, what could have happened? In another universe, if the Fed and world and central banks around the world hadn't stepped in to backstop risk assets and made those announcements around this time, this floor could have just kept falling, and maybe one would have just gone to zero. And then no one would have been looking back saying, oh, I wish I would have bought there, because they would have known that it went down and that was bad. It's only in the benefit of hindsight that you can look back and say, oh yeah, clearly that was the bottom. I think that's what a lot of people do, is they think that somehow it'll be obvious when it's the bottom, and then they should just go all in on the asset then, because they'll ride it up to glory. Now, the issue with that, again, as I was mentioning, is that it can lead to a lot of knife catching, because probably throughout this whole drawdown, there are some people thinking, all right, this is the bottom. I'm going to buy in here so I can ride it up to glory in the next bull run. And then price ended up dumping way further. So let's imagine that you had bought this thinking it was the bottom. Price dropped another 70% before the actual bottom formed. Now, of course, in this particular instance, you didn't have to wait super long before getting back to that cost basis. But just like this idea that trying to catch knives can be dangerous. And if you're doing, you're calling a bottom and going all in, you're buying when you could have been buying for 70% less, or the price, would have fallen out, 70% to the downside. That's not great. And so that's where, for me personally, when I look at altcoins, I don't really see too much reason to be catching knives. I'm not even concerned about catching the absolute bottom, because it's so difficult. You're just as likely to, call it here and then watch price fall 70% below you than you are to actually catch it right here. And that's where, for me personally, that's why I like indicators like the market direction classifier, which would have gotten you in still pretty early. It was around about right here when the MDC would have been telling you to get back in. If you had bought then and rode that to the top, that's still, a 12,000% move to the upside. I don't think anyone's really going to be complaining about a 12,000% profit. And again, that's not catching knives. That's using this data-driven approach that would help manage risk. Because even if this was just a fake out when this had happened, you would have just fallen below the critical price, sold out at that point, and that would have saved you from the downside. So again, that's why I personally don't see catching knives as being all that useful. Now again, not financial advice. Do whatever you want. If you think that you can call the absolute bottom, more power to you. I'm not telling you what you should do with your money. But for me personally, those are things that I think about, that I see a lot of people, especially with altcoins, trying to catch the bottom. They're trying to catch falling knives, thinking that they've got it this time, that this is the bottom, only to watch price fall another 50% to the downside soon after. And that's just going to lead to a lot of heartache, more likely than not. So for me personally, I'm not getting excited about any altcoin, one or any of the other ones, until I see some of those indicators flashing more bullish. And then even if I miss the absolute bottom, I don't really care, because there's still, the possibility of something on the order of, it's probably unlikely that one could do another, 12,000% move to the upside, given that the volatility tends to diminish. But even let's say that price were to rebound up to 4 cents and the MDC were to get bullish, and then we go all the way back up just to the prior high. That's an 828% move to the upside. And sure, if I bought now, I could be looking at something like a 1,200% move to the upside. But it could also be the case that I'd buy now and price would fall another, 50% or whatever the case may be. It wouldn't have to go all that far for it to fall that 50%, and then I would have been out quite a bit of money. So again, that's just one thing that I think about with all altcoins. And that's one of the things, especially when I look at something like one that's fallen this far, never think that just because something has fallen, 92, 94%, that it can't fall, another 50%. Another thing that people don't talk about is the fact that if one just were to fall down to closer to 1 cent, that's only going to look, 95, 96% from that January top, but that would still be another 50% move to the downside if it were to do that. So that's something that you have to keep in mind with these altcoins. They're highly risky in bear markets in these types of conditions. Now, that whole discussion, I just wanted to say that because I think it's just critically important to keep in mind with any risky altcoin in a bear market. So I'm not picking on one. I'm not saying that one is any different than other altcoins. Frankly, this is the way I view all altcoins right now, is that, there's a lot of danger in catching knives, potentially. But I think the other question that we can ask with one then is okay, even if this isn't the bottom, and even if there are risks of catching the knives, is one still something that we should just be paying close attention to? Is this something that we think is going to survive the bear market first off? And then if it does survive the bear market, is it going to be able to really succeed? Because again, the whole idea with using something like the market direction classifier or anything like that is that you're paying attention to the asset and then you're just buying when it's saying is a good entry point. But that's still suggesting that you're overall bullish on the asset, right? That you think it's worth buying in at that point because you think the asset has a lot of upside to realize. If you think that one's just going to ultimately go down to zero, you're probably not all that interested, even if there is some volatility along the way. Now, I'm not saying I think one's going to zero. I think I think the people who are interested in it, they're interested in it for a lot of reasons. It certainly has good technology. It's very high throughput, low transaction fees. It has a lot of those kind of technological fundamental features that a lot of other competitive L1s have. So I don't think it's behind on that by any stretch of the imagination. But there's some other things that we can look at to see about the health of a asset like one. And so one thing that I like to look at is DeFi adoption, DeFi usage. So I'm on DeFi Llama here, and we can see that Harmony is currently at number 30 in terms of total value blocked, coming in at 82 million. Now, the one thing that's absolutely brutal about that is that at one point, back at the beginning of the year, Harmony had almost 1.4 billion, or a little over at the highest, $1.4 billion of total value locked on it. You can see how this has just fallen off of a cliff all the way back down to 82. We haven't seen levels this low really since, the summer of 21, during that market correction. That was the last time we've seen kind of this little amount of value being locked on Harmony. Now, there's a couple different reasons for this, of course. The first reason is just that a lot of the assets that people would lock on any chain have been falling off in price. So this isn't really necessarily to say anything that there's, part of this is not to say that there's weakness on the part of one that in this downtrend. Frankly, any chain you look at is going to be seeing this, even if the number of crypto assets were identical on the network. Because all of those assets, if they've been bleeding off, 80% to the downside or whatever, then the value of the things locked on the network is also going to fall off 80%, even if no one took any of their assets out of the chain. So that's the first thing we have to recognize here. Then that being said, there's also the thing that we have to look at is just, is there a change that's happening in the usage of the network? And the one thing about Harmony that had been kind of a bearish headwind was that DeFi Kingdoms, the premier kind of DeFi protocol on the network, had branched out to the Avalanche ecosystem, which had then sucked some of the total value locked away from Harmony. And then, of course, the idea is with DeFi adoption, the more that people are using your chain for DeFi, the more that you need to buy the native token to pay for things like transaction fees, etc. You need the native token to use the native chain, and then oftentimes a lot of people will use the native asset in DeFi itself. They'll use it as collateral, or they'll try to take profits on that chain and move it into the native token. There's a lot of demand drivers or kind of buying power that gets generated by having your chain being used a lot for DeFi. And so this is something that I'm personally going to be keeping a close eye on with Harmony. Is it able to, once we're actually in a point where the market stabilizes, even if it ultimately has to go down further, stabilize it, or even if we get some kind of relief rally, how does Harmony react to that in its total value locked, right? Once we're getting into more bullish footing, is Harmony able to climb back up the rankings, reestablish some of that DeFi footing, or does it not? Does it kind of stay down in doldrums in these lower values of total value locked and get left behind by other assets? That's one of the ways I think is reasonable to kind of view the health and adoption of the protocol. And that also would give us an idea of how it's going to fare into the future. If it's quickly kind of ends up being a lot of interest in it and a lot of people start locking more value, that might suggest that there is more long-term fundamental potential there, that especially in the next full-on bull market, that a lot of people might flood into the protocol. But if we don't see that, that would be a concerning sign, which might suggest that people are abandoning the Harmony chain for other ones. And that's, of course, would not be a good look for the future. So I know these are things that people might not like to hear. I think there are a lot of people who are a fan of the Harmony chain. Certainly it has low transaction fees. There's a lot of things that especially retail probably would like about a chain like that, similar to some of the other cheap layer one protocols. And I know that a lot of people like DeFi Kingdoms, etc. But with anything, and especially with altcoins in a bear market, I think it's just important for us to keep an open mind that, you know, we can love protocols technology, we can love the community, we can love all those things, but we also can't let that blind us to the possibility of it not going the way that we think it should. You know, everyone has a thesis about an asset. You know, I think there are a lot of people who are bullish on Harmony, but I think it's just critically important, especially in a bear market, to always be challenging your own thesis. Test it. Are things actually going the way that they should be for your thesis to be intact? And if you're finding yourself having to make a lot of excuses for the chain and saying, oh yeah, well that happened because of this FUD and this happened because of that, but it's all going to be fine in 12 months, you know, maybe that's going to be the case. Maybe it is, but also maybe it's not. And in those cases where it's not, you know, you don't want to be the person who's just going down with the ship for no discernible reason. Now, again, I'm not trying to say that to be spreading FUD or to be picking on Harmony. I would basically be saying the exact same thing about any of these alt layer 1 chains right now. I think with any single one of these, everyone who has a thesis about it needs to be critically thinking about it, not just blindly following, because that can be expensive. That's how people follow things all the way down to zero, because they're not thinking about the alternative, thinking about how things could go the other way. So I'm not picking on one specifically when I'm saying this, but I just think it's something that's important to keep in mind. And I do think that there's every possibility that one could come through this bear market and it could go on, set new all-time highs, and then make the Harmony bulls very happy. You know, one thing we can see is that there is a lot of building that's happening on Harmony relative to a lot of other chains, a lot of big number of protocols. Now, not as many as some of these other ones, but certainly more than kind of your average. And so that's, again, what I'm going to be looking for, is that in a bear market, what I want to be seeing is signs that developers want to build on Harmony and that people want to come back to Harmony once there's more money to be thrown around. And if that happens, that would just be one fundamental factor that I would see as being quite bullish for the future prospects. So to wrap up, kind of my overall assessment with Harmony right now is I see in the short term kind of where we are right now based on things like the MBI and the MDC. Now, I'm not too excited about it yet. I don't see this as being a particularly great entry point. Again, not financial advice, you should make your own decisions. But I'm not seeing anything here that tells me that Harmony is going to go rip back to the upside. And frankly, I don't think it will, or it would have the potential to do that until the broader crypto market turns around and gets a bit more bullish. But if we're asking the question, should we pay attention? I personally think yes. Harmony is certainly an asset that I'm going to be keeping a close eye on from here. I'm going to be watching its price action, if it gets back up to things like the MDC. Because then, you know, I do think that Harmony, it's something that has performed very well in the past. I think there's enough development on it in DeFi that it very much warrants us to continue following it and seeing how it goes from here. And again, if it's able to kind of reestablish that DeFi credentials and get some other building going on it, then I think it could potentially perform very well in the next bull phase. But right now, I'm not super excited. But in the future, it very well might be an exciting asset. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. Put a lot of updates about indicators and more over there.